Good morning, it's May 12th. This is Two My Liberal Friends. Last week I talked about the tax bill and how Republicans would have to come together and get something done because the clock was ticking. Well, the first look at what the bill might contain is available, and it's surprising on many fronts. They did do something that I suggested and hiked the standard deduction by $2,000 and now stands at $32,000. This is a move that will help 90% of those filing their taxes since they don't need to itemize and use a Schedule A. They also proposed to increase the child tax credit by another $500, and that will benefit a lot of middle-class families. Currently, that credit is at $2,000. If nothing is done, it would revert back to $1,000. This proposal would put it at $2,500 through 2028, then drop it back to $2,000, but keep it indexed. And by that, I mean it would change due to inflation. Another part of this provision would prevent the credit from being applied to illegal immigrants. To make this clear, you have to understand that a tax credit is not a tax deduction. You simply look at how much tax you owe and then reduce it by the amount of the credit. In many cases, it totally eliminates the taxpayer's tax burden, and they actually get money back. These two provisions were aimed directly at the average American and will help push back on the Democrats' tired old mantra, the Republican bill only helps the wealthy. It wasn't true then, and it's not true now. The proposal would also make permanent the list of lower income rates that were put in place in the 2017 tax bill. That was basically a 10% across the board cut for everyone, and even the Washington Post and New York Times had to finally admit that the middle class got a tax cut under the bill. What the bill does not do is allow the top marginal rate to go back to 39.6%, and I think that's a mistake. Under the current code, it would only affect taxable income of $761,600 for a married couple filing jointly. What that means is any income over that amount would be taxed at 3% more in raw numbers. You make $771,600, the taxable income for your tax bill would increase by $600. This bracket does not affect that many people, and I think Republicans are making a mistake not raising that rate. President Trump has weighed in on this issue and supported increasing the top marginal rate. Now, he suggested higher numbers on the income side, but as I said last week, I would have allowed it to go into effect at the current income numbers, or even compromising and having the top rate go into effect at taxable income over $1 million. In any tax bill, if you're going to spend some money, you have to come up with what's known as some pay-fors. That is revenue to pay for the costs. This draft version is estimated to have a $5 trillion cost, which is above the $4.5 trillion that was permitted in the underlying budget framework. There are some controversial proposals in the outline plan, like increasing the tax on college endowment earnings, read that Harvard and other elite universities, and limiting many of the green energy subsidies that were put in place by the Biden administration. Now, we have to look at some things this 28-page outline did not address. There was no mention of President Trump's campaign promise of not taxing tips or overtime. If you remember, Kamala Harris mimicked this promise when she was campaigning in Nevada. This has always been a sticky issue because people would quickly learn how to game the system. As an example, a consultant could set his fee lower than normal and suggest a tip to make up the difference. He would not be taxed on the tip. President Trump also campaigned on the idea of not taxing Social Security benefits. Now, I understand that, but it's tough right now. Prior to 1984, Social Security benefits were exempt from federal income tax, and that began to change based on the 1983 Greenspan Commission recommendation. Congress began to tax benefits for those that have income above certain thresholds. Congress, being who they are, enacted new policies in 1993 to tax up to 85% of the benefits for those with combined incomes above $34,000 for a single filer and $44,000 for joint filers. Interestingly, they were not indexed for inflation, so every year they catch more and more people. Now, before someone jumps in and talks about how they paid for these benefits, I want to point out that this is true and not true. Under the system, lower wage workers contribute less toward the cost of their benefits than higher wage workers. The payroll tax is the same for everyone, but due to the progressive benefit formula in Social Security, it provides proportionally larger benefits for lower wage earners relative to their contributions. When the Ways and Means Committee takes up the legislation tomorrow, I would expect a much more detailed amendment that might address some of these issues. They will also have to finally show their cards on the state and local tax issue. Republicans from high tax states have been demanding that SALT deduction be increased from its current $10,000. Because it was, again, never indexed, it's now catching more and more filers, many of them from lower tax states. If you want to put other items that Trump has proposed, like the no tax on Social Security and tips, then they're going to have to find some serious revenue increases. Just adding these things to the national debt, It's not going to cut it. At 37 trillion, the numbers reached a point where we are saddling our next generations with a debt they cannot service. We can't keep doing this. This has been To My Liberal Friends. Thanks for listening.